We've got Mr. M.R. Nayak, who's Executive Director at Allahabad Bank, who joins us on the show from Kolkata. Mr. Nayak, to begin with, your Tier 1 ratio, if you could just focus on your capital position, it stood at 8.9%. If you could tell us what your Tier 1 ratio post the preferential issue to the government in LIC is, and what the amount of capital infusion that you expect from the recent budgetary allocation of 15,800 crores for PSU banks in the next financial year is going to be.
We are likely to reach a Tier 1 capital of 9.25% after the infusion of the capital. Government, we have asked for 1,000 crore, and LIC we are offloading 5% stake. Even if LIC gives us 5%, we will be somewhere around 12.75 of capital adequacy, and Tier 1 it will be above 9%, and Tier 2 is around 3.5%. And our risk-weighted assets are growing at a rate of about 20%. So we are very comfortable as far as the capital is concerned.
Mr. Nayak, if we talk about your exposure to some of the stressed sectors like aviation and telecommunication, it's fairly negligible. The power sector contributes close to 13% of your total book, with the SEB exposure at 9%. Are you seeing any stress coming in from the power and SEBs?
Little stress is there, which is manageable. That is, Rajasthan Electricity Board has already been restructured with zero provisioning in the restructured asset. State government has taken care of that, and we have both profit-making State Electricity Board and loss-making together. So the portion of restructured asset is quite manageable.
Right now, Mr. Nayak, if we could just focus on some media reports which have indicated that Electrotherm India and Jai Balaji, both of them together have something like 5,000 crores in debt, which is being referred to the CDR. Now, you've got an exposure over there. If you could just give us an update in terms of how that is progressing.
My marginal exposure is there. We don't have any major exposure in both the companies. We are quite comfortable with that.
Mr. Nayak, your asset quality has been deteriorating sequentially. Where do you see your gross NPA levels stabilizing, and what is the outlook for your net interest margins?
We are looking at net interest margin of 3.60 for the whole year. And last quarter our NIM was 3.73, and the gross NPA we will be able to contain at less than 2%, and net NPA of less than 1%.
So now your net interest margin that you spoke of, Mr. Nayak, of 3.6%, I'm assuming that is for FY12.
FY12,
yeah.
whole year FY12
sure. So
it is 3.60.
Right. So going into FY13, are you confident that these margin levels can be maintained, or should we expect that it will come off slightly a little more?
30 basis point slightly reduced, and for next year it will be around 3.30 we are projecting.
All right, Mr. Nayak,
guidance to the market is 3%, but we are...
Sure, go ahead.
Guidance to the market is at 3%, but we are managing at 3.60 for the whole year. And next year the margin is likely to come down to 3.30 to 3.40. We will not be able to sustain the margin at 3.60. But nevertheless, we will increase the volume year by year.
All right, Mr. Nayak, thanks very much for coming in on the show and giving us the outlook on the asset quality picture and also the net interest margin picture at Allahabad Bank.